Hey all, today I'm going to be giving you 6 different reasons why property or real estate is the best investment you can make. This video will definitely help you if you're looking for something to invest in or if you just want to make some additional income on the side. But firstly, remember to drop a like down below to help get rid of the virus and end the pandemic sooner. Now let's get into the video. Firstly is leverage, and leverage is the main reason why I invest in property. Leverage isn't necessarily unique to property because you can leverage when investing with stocks, but it does have a very unique way that it does work with property. But firstly, let me explain what leverage actually is. So you can use leverage to trade stocks. So instead of buying, say, $1,000 worth of Apple, you could use a 5 times leverage and buy $5,000 worth of Apple. So technically how this would work is you'd borrow, say, $4,000 from the stock trading platform, and then you'd use your $1,000 to buy the $5,000 worth of Apple. But what effect does this really have? So let's go through an actual example. So let's say that you bought $1,000 worth of Apple, and then the Apple stock actually increased by 10%. So it goes up by 10%. Your then Apple stock is worth $1,100. Agree? So you've made a $100 profit, which is a 10% profit. Fine, we know that. But now let's see what happens when we use some leverage. So instead of using our $1,000 to buy some Apple, we're instead going to use a 5x leverage. So we're going to buy $5,000 worth of Apple. And let's say that the Apple stock increases by 10%, similar to the last example. So actually our Apple stock is now worth $5,500. And that means we've made a profit of $500. But we still only used our initial $1,000 investment because we borrowed the other $4,000. So our $500 profit on a $1,000 investment is actually a 50% return when you use leverage. So this basically means that you can just make a much bigger return or a much bigger profit using the same amount or even a small amount of your own money. But it does come obviously with a risk that you can also lose more money, because if the stock dropped by 10%, instead of losing $100, you'd lose $500, which is obviously half of your initial investment. This is obviously very similar with property, because in property you can use up to a 10x leverage. So instead of buying a property for, say, 50 grand and then hoping it increases by 10% to 55 grand, making you a 5 grand profit, you could buy a 500 grand property and hope it increases by 10% to 550 grand, making you a £50,000 return. And obviously that basically just double your initial investment of 50 grand up to 100 grand, not including taxes of course. With property you can also use some of your costs to offset against the profits that you make and therefore pay less tax. If you're having to do some repairs, you can obviously use these costs of repairs to offset so that you don't actually have to pay as much tax. You can also use the interest costs and some other kinds of charges as well. And another reason why property is the best vehicle to take advantage of leverage is because when you're trading stocks, if the stock falls by quite a bit and you've lost most of your initial investment, the stock trading platform will actually sell your stock to prevent them from suffering any losses. But obviously with property, the bank won't ever sell your property and kick you out, providing obviously that you do keep up with your mortgage repayments. Another reason why leverage is great is because it's actually fairly cheap to borrow all this money, whether you're doing it in property or with stocks. A residential mortgage is typically between 1 and 2% interest per year, and obviously a buy-to-let or a rental property mortgage is around 2 to 4% interest. So really you're not actually paying that much money to be able to take advantage of all this borrowing to buy a more expensive property where you can generate a bigger return. The second reason why property is the best investment is because of cash flow. With property, you can rent that property out to tenants. It's not exactly passive income, but you will be getting paid rent every single month. And obviously, as I said earlier, you can use those expenses to offset against that rent and pay less tax on the profits. Now, it's not exactly passive income because you are going to have to spend some time finding the property, referencing tenants, answering questions and doing repairs. So I guess there is a slight downside of investing in property compared to stocks, because obviously a stock isn't exactly going to call you in the middle of the night because it's got a leak. Now you can get a similar kind of thing with some stocks that pay dividends, but obviously dividends are only really paid once or twice, maybe 4 times a year, whereas rental income comes in 12 months of the year. With rental income as well, you've got a bit more control because your tenant is tied into a fixed contract with a fixed rental sum. And obviously companies can kind of choose how much dividends they want to pay. So you might be expecting one number for your dividend and actually the company pays you a whole lot less. But obviously just because you have a tenant that's tied into a fixed rental contract, it doesn't necessarily mean that they're going to pay you on time every single month. There have definitely been some horror stories with tenants on rental contracts. But this is why you really need to make sure that you do your due diligence in advance and pick the best tenant that has all the correct references, minimum income, previous tenant history, and bits and pieces like that. Another benefit of owning rental property is that you can benefit from future rental increases. You might want to increase the rent for your tenants every year or every few years. And obviously that's going to mean that your income is going to steadily increase. And actually, while your costs will increase over time due to inflation, they probably won't actually increase as fast as you're upping those rents. So actually, over time, you're going to be making more and more profit every single year with your rental properties. And obviously, because you have a physical tenant in those properties, not only can you work out a fair increase in the rents, but it's also an actual person that you can talk to. You can build a relationship with them or talk about politics or get advice from them. And you can't exactly talk to a stock now, can you? If you've enjoyed the video so far, then be sure to drop a comment down below letting me know what you like about rental properties, or alternatively, what you don't like about property investing. And now the third reason is that it's always a place to live. Investing in property is great because it gives you an alternative. Let's say something isn't working at home or in a relationship or at work. If you have rental properties, it gives you an alternative place to live if you really need to. This gives you the flexibility to change the mortgage terms. When the tenant gets to the end of their contract, you could convert the mortgage from a buy-to-let or from a rental property mortgage to a residential mortgage, and you can then live in the property. It's also quite beneficial for tax purposes because obviously you pay less tax on properties that you live in. It's also quite nice for just a change of scenery. If you own multiple rental properties around the country, you could move house every couple of years or just go for a short stay in one of those houses that you own. And you can't exactly go and physically live inside a stock or a high interest rate savings account, that's for sure. The fourth reason is stability. And this is really quite ironic because there's some times where the market really won't be stable and can be very unstable, such as right now. But if you do look at the long term and you look at the HPI graph, which is a housing price index, over the long term, the house prices do generally always rise depending on what time frame you're looking at. This is quite comforting to an investor because it reduces risk. Because at the end of the day, you know that even if you do buy just before a recession, providing you wait 5, 10 or 20 years, that property is going to be worth a lot more than you bought it for. And now I know that some people are going to say, oh, but Tom, house prices in London or New York or LA, they're overpriced. They can't go any higher. The only way they can come is down. And if you went back and looked 50 or 60 years in the past, you'd find out that actually house prices were about £197. I think my nan actually bought her first house for £201. So if you compare that to the average house price in the UK now of 230 grand, you'll see that house prices anywhere in the world can definitely go up. It wouldn't surprise me if in 50 or 60 years, the average house price in the UK won't be 230 grand, it'll be 2.3 million. And the average house in London won't cost around 500 grand, it'll cost like 5 million. And now I've gone a little bit off topic, but effectively what I was trying to get at is that it's a somewhat predictable return because you know that in the future you're going to make money. Another reason why property investing is fairly stable is because at the end of the day, even if the market does crash, the property is not exactly going to disappear and go bankrupt like a company could. At the end of the day, your property is always going to be sat there because it's physical bricks and mortar, unless your property burns down. If you've made it this far into the video, be sure to subscribe because I'm guessing that you're probably enjoying the video so far if you're still watching. And now the fifth reason is forcing an increase in value. When you buy a stock, the value of that stock is what you paid for it. It can go up and down in the future, but what you pay for it is the value of it. With property, you can buy a property that's in need of refurbishment and you can refurbish it and actually make it worth more yourself. And if you watch some of my other videos, you'll find that you can spend 10 to 15k on a property and actually increase the value of that property by 50 or 60k. And that kind of insulates you from negative movements in the market because you've kind of made your property worth more than you actually bought it for. But let me show you quickly how this actually works. So let's say that you buy a property for £200,000 and then you spend on that property about £10,000. So all in, you've spent about £210,000 on your property. This property is actually probably going to be worth £250,000 if you've done how I teach about buying the gap. And let's say the market decreases by about 10%. That means that your property is worth about £225,000 now. But actually, because you bought it for £210,000, or you're all in for £210,000, that means you've still made a £15,000 profit, even though the market's fallen. And point number 6 is that you can actually do it on the side. Now, I know I said that property investing isn't exactly passive, which it's not, but it doesn't take up a lot of time. For example, let's say that you buy a property that's in need of refurbishments. You could refurbish it on your weekends if you work a 9-to-5 job. And if you really don't have any time, let's say you work 7 days a week, you could just hire a builder or someone else to obviously do the refurbishments and manage that process. And providing you have, say, 1 to 5 tenants or 1 to 5 properties, it's fairly easy to manage the repairs as they come up, just in lunch breaks or mornings and afternoons. Obviously, if someone has a leak in the morning, you can just call a plumber at lunchtime to come out and fix it by the end of the day. Obviously, as you start approaching 10, 15 or 20 rental properties, it does kind of become a lot more of a full-time job. But obviously, if you do still want to keep property as only your side job, you could just hire a property manager and they would manage all those issues for you so that you can keep property as your side hustle and continue with your full-time job. So obviously you can do it on the side. Obviously you are still going to need to find those tenants and do those repairs and bits and pieces, but it's probably more of like a 0 to 10 hours a month worth of work. Instead of, say, 60 hours a week, you're probably only working like 2 or 3 hours a week on your property business. And as always, if you want to learn more about property investing, then be sure to check out some of my other videos. Alternatively, subscribe to the channel and ding the notification bell. This way, you'll be alerted when I make a new video. Cheers!